What is going on, investors? Hopefully, you guys are having a wonderful day out there. I tell you what, it's been a wonderful year if you've been a Google shareholder. The company just reported their Q3 numbers, but after the bell today, we're going to get into them. We'll take a look at all the revenues, the profits, the cash flows, and the all-important balance sheet over at Google as well. And then we'll take a look at this from a technical perspective as well. In the after-hours trade, this thing's selling off a little bit. It's basically giving back its gain it had during the regular session, up about 1.33%, giving that back in the after hour section. We'll talk about what that means from a technical perspective as well. Is it too late to buy Google? Now, I mentioned that it's been an absolutely wonderful year to own Google shares, and that's because over the last year, the stock's up 68%. Just year to date, this stock is up 58%. This is why here on the Investor Channel, you don't see me cover penny stocks. You don't see me cover micro cap stocks. I get offers all the time to do sometimes upwards of $1,000 cash in my pocket to do a video on a micro cap stock. The reason why I don't do that is because I don't believe that makes you a great investor. And that is the whole goal of this entire channel. It's not to fill my pocket with money. It's to make you the best investor in the world. Not the best investor you can be. It's to be the best investor in the world. And you get absolutely nothing out of a video on a micro cap stock that pays me $1,000 to do a video that has absolutely no chance of doing the type of year and year-to-date performance that a company like Google has. That's why we've been focusing on these mega cap stocks. That's why the whole channel revolves around the mega cap stocks. That is because that is what the market is rewarding, not what is rewarding to me from a viewership perspective and a cash perspective, but rewards us as investors, because that is what we want to become, is a great investor. And take a look over, look from a valuation perspective, Google is not that wildly overvalued. We've got a PE of 27. We'll take a look here at the press release. They grew their top line by 41%. So you're getting 41% revenue growth, and you're only having to pay a forward PE of 27. We just did a video on Facebook early in the day. I think they're sitting about 23 times forward earnings. These companies are still, in my opinion, probably overvalued when you factor in the headwinds that they've had to fight through over the last year. We get some tailwinds on these companies, and who knows the kind of numbers that they'll report. Now, speaking of numbers, Q3 numbers came in, and they're absolutely fantastic. Okay, nearly $2 billion on that revenue side, better than expected, to $65 billion. Yeah, $65 billion. This is not for a year. This is not for a lifetime. We're talking about for a quarter, for 3 months. They put up $63 billion worth of revenues. That is good for 41% growth, as we've talked about now across all their business segments. Google Search up 44%. Google Ads up 43%. Google Network, essentially AdSense, more ads essentially, up 40%. Google Other up 23%. Google Cloud up 45%. And other bets up just 2%. Talk about more of that here in a second as well. Now, let's jump into the numbers. We'll look at them from a high level, and then we'll kind of get into the nitty gritty of the cost and the cash flows here in a second. Now, first thing is Google Search and Others. This is when you type into Google, your search bar, that type of income and revenue for Google. It went from 26 billion up to this, 37, nearly 38 billion. So we nearly saw $12 billion of top line growth on that search. Now you got YouTube. Every one of you are watching this on YouTube. And unless you got that YouTube Red or the YouTube Premium, I think that's what they're calling it these days, well, you're seeing a bunch of ads. And take a look, you went from 5 billion up to $7.2 billion on that YouTube side. They are churning out tons of ads over on YouTube. And Google Network went from 5.7 up to roughly $8 billion. So that gives us our total advertising went from 37 to 53. And it's important to understand the difference between advertising, their services, and their cloud and their other bets. I'll show you why here in a second. Now we've got some service total that are basically our total services went from 42 up to this 59. And then when you got Google Cloud went from 3.4 up to really close to 5. And you got some other bets, which is essentially rounding error. Add all those revenues up and you get to that $65 billion mark. Again, that's up 41% where we were in the previous period. You got total employees ticking up as well. Now, here's probably the most important thing to understand about Google. They got a lot of things going on, but the only thing that makes money is their advertising business. Take a look at Google services. So here's our Google service total. It came in at $59 billion. Off of that $59 billion, again, $59 billion out of a $65 billion total. So the vast majority of our revenues is coming right here in this advertising. Okay, that came in, this is operating operating results, this is operating income, this is essentially your profit on the business lines, came in at $24 billion. You're sitting at just $14 billion. I thought it was great last year, and you just bolted on nearly $10 billion, not 10 million, 10 billion with a B for boy, for billions. For balling over at Google, you bolted on that, and I tell you what, it's just absolutely fantastic. Now, Google Cloud, it looks like to me, it's on the tipping point, okay? We went from $3.4 billion on that revenue side up to that $5 billion like we talked about, but they're still losing money. They lost 1.2 last year. Now they lost 644. It looks like we're getting very close to profit over there on that cloud division. So that should be exciting as investors. Will it ever be as big as the service in the advertising business? Absolutely not. But if we can start printing $1 billion, $2 billion, maybe even potentially $3 billion on that cloud side, well, that will flow right down to that bottom line, and that will make Google shares even more undervalued than they are. Because keep in mind, okay, the forward PE represents likely some losses in this cloud service business. Okay, we start turning this to a profit. That forward PE all of a sudden turns even lower, and so we're getting even better valuation. Other bets, I don't think anybody is expecting Google to make any money there. They're losing tune of $1 billion, actually more than that. Okay, you had $182 million of the revenue, and you lost 1.2 on that. So they're losing lots of money, and you got this corporate cost, which we'll outline here in a second. So you got your total income from operations. Oh my goodness. You went from $11 billion in income up to $21 billion in income. Imagine this is your job, okay? Imagine if you made $11,000 last year and now you're making $21,000. You'd probably be feeling pretty darn good about yourself, and Google just did that. And I think you as a shareholder of Google or potential shareholder of Google should be feeling really good about that. Now, from a balance sheet perspective, I just did Microsoft. I didn't think it could get any better. And then I brought up the Google balance sheet, and it does get better. Oh my goodness. Take a look at, here's our assets, okay? This is straight cash homie. We got $140 billion, okay? You got 23 in current, 118 in marketable securities, essentially like treasuries, stuff like that. But basically, it's your cash, okay? You went from 136 up to 142. Now, the difference between Google and Microsoft had about $50 billion worth of debt. We come down here on the long-term debt side on Google. They only got 14. So it gets even better over here at Google. They've got a ton of, we're talking about a boatload of cash. And quite frankly, it's really a tragedy from an investment perspective, maybe from a social aspect or, a non-monopolistic state perspective. It is good that Google can't just unload this cash and just go buy Yahoo, go buy Bing, go buy whatever search engine it wants and just dominate the market. Okay. But they have a ton of cash. And it'd be awesome if they were to unleash this cash however they wanted to. But companies, the United States government is simply not going to allow them to acquire a lot of online advertising investments. So Google's going to have to expand their businesses in other ways outside of advertising, traditional advertising. And we'll see if they're able to do that. Because look, they're not going to be able to buy a major acquisition. It doesn't matter who's in charge in the government side, whether it's a Democrat or Republican or a mix of both. They're not going to allow Google to do that. So we'll see what happens. I think this company should start paying a dividend. We'll see evidence of their buyback when we get to the cash flows as well. Now we've got our statement of income. This is basically what we just looked at over here from a condensed perspective. We see this $65 billion. I want to show you this so you really get comfortable with these numbers so you can really flick through these and understand these on your own. So you got $65 billion worth of revenue in the most recent quarter. So you come here, you got our quarter ended. I don't like how they do it left to right. Most companies do it right to left, essentially, if I'm getting that right. But our middle column or second column is essentially our most recent quarter. Here's that $65 billion. Here's the 46 in the previous period. So there's that 41% growth. Now we've got our cost of revenues here. You want to see how this stuff is scaling up. And over at Google, as you can imagine, it's scaling up absolutely beautiful. Okay. Our cost of revenue, sure, you bolt on 41% more revenue. Sure, your cost of revenues are going to go up. Research and development up just fractionally. Okay. You went from 6.9 up to 7.7. Sales and marketing barely budged from 4.2 up to 5.5. Again, that's $1.3 billion basically. But when you factor in how much we're bolting onto this top side, that's nearly $19 billion. That is barely budging on that sales and marketing. Imagine spending just $1.3 billion more on your marketing side to get $19 billion more in revenue. You do that every single day and you wouldn't even hesitate to do that. Now on the general administrative side, again, up just fractionally, like $500 million. Basically, a rounding error. Total costs and expenses went from 34 point, we'll call that 35, up to 44. So basically about a $9 billion, nearly $10 billion increase on that total cost from operations. But when you grew your top line by 19 billion, guess what? Our income from operation went from 11.2 up to nearly 21 billion. In fact, over 21 billion dollars, not nearly. That is good for nearly 10 billion. Yeah, $10 billion growth on that operating income side. And most of it flew down after you paid some taxes and some other types of things. Net income went from 11.2 up to 18.9. That is a cool $7.2 billion increase on that income side. So our income from operations, or our revenues, essentially went up 19 billion, and it flowed nearly over 7 billion of it flowed down to net income. Okay, I don't care what business you're running, whether it's online advertising or some business you're running out of your basement. That type of performance will get you consistently rich if you bolt on that much revenue in a quarter, year over year, and then a ton of it, in fact, a lot of it flows down to the balance sheet. You notice we went from $16.40 per share up to this $28. They're earning $28 per share. Hey, Google, how about throw us a $5 per share dividend? Or a $10 per share dividend. I mean, they could be paying out a bunch of money. This company is just absolutely printing money, and we can see it here from a cash flow perspective as well. The middle column, so we pull down that $18.9 billion worth of net income. This second column, not really the middle, but the second column is our most recent quarter. And so we can see here at net cash provided by our operating activities. This company, just like Microsoft, we just did a video on Microsoft, they printed about $25 billion in a quarter. And so did Google. That is $100 billion worth of cash flow. And you might say, well, $100 billion of cash flow, that's pretty good. Well, bring up any of the microcap stocks or any of these other microcap stocks that these other YouTubers have been suggesting you run out and buy and go all in and buy options and lever yourself up. How are they doing? Are they doing $25 billion worth of cash flow in a quarter? No, they're not even doing $25 million worth of cash flow in a quarter, okay? This company's just absolutely phenomenal. Now, they are from an investing activities. They're kind of recycling that cash. That's kind of what we're seeing. Purchase of property and equipment. They did about 6.8 in the most recent period. It looks like that's what they're doing. They probably have to buy data centers. I also know that they purchased office building in New York, I think for about $1 billion. That could be why we went from 5.4 up to the 6.8. That office building might take a toll on that. I don't know if that deal is closed or not. All things being considered, it's basically nothing, okay? You got $25 billion worth of cash flow. On the investing side, you spent not even half of that at $10 billion. Now let's take a look at the financing. Okay, they get some net payments related to stock-based awards. This is likely to executives. Those executives get to take that award, that stock option, and then sell it back into the buyback, which they did $12.6 billion worth of repurchases in the most recent quarter. So that has accelerated as well. That's helped Google stock accelerate as well. They basically did a tap, I call it a tap dance refinance. That's not a proper term, but that's basically what they do here, okay? So they took out $6.3 billion worth of debt, and they repaid basically that same amount. My guess is this is just a refinance at a lower rate, stretch the term out when you can borrow as little interest rate as Google has. And look, if they had reason to use cash other than this buyback, I would say, look, get on more debt, pile on more debt over at Google. You got plenty of cash, and the banks are willing to dump this money, but they really don't have a use for this cash. I'd like to see Google start paying a dividend. They earn just a massive amount of money per share. Even if it was just kind of a token dividend, I'd like to see that. That would put Google into some dividend growth funds and some ETFs, some passive investing funds. I think it would help the stock even more. Whether or not the executives over at Google are interested in that, I don't know. And I tell you what I'm interested in is, look, last year at this time, the stock was $1,600. Now it's $2,800. This stock's absolutely gone bananas. We've had to zoom out here. If you're a regular viewer of the show, every Friday we recap Google from a technical perspective and a news perspective. So if you're interested in keeping up on Google from a news perspective, but also from a price chart technical perspective, we review it every week on Friday here on the channel. And it's something that you can watch either on Friday or over the week. And in fact, we get more views on that that show over the weekend. Now, from a technical perspective, the reason why I had this zoomed out, and I probably should have talked about this before I zoomed back in. Well, we were in this big upward channel, and this is like, think about this like an airplane taking off, okay? The airplane's catching altitude, it's going up, it's trying to get to cruising altitude. And these upward trend lines, these upward channels, not always a big deal, but the more this stock tags it and rebounds up, tags, rebounds up, tags, rebounds up, the more confidence you have on that channel. And what it does is when the channel is broken, it gives you a lot of confidence that a trend has been broken. So with Google, we actually broke down right in here, right around $2,700 per share, right about where the stock is right now. And the stock broke down and it hit $2,700 per share on the nose, okay? And that's why I have this line marked out, is right now, Google's, I would say the bottom of the range right now is $2,700. Now, what we fully expected this stock to do was bounce here at 27 and then come back and back test this lower trend line. That's what I have my cursor on right now. This is the lower end of our upward channel. Oftentimes when you have a break, it finds some kind of area to bottom out and then comes back and back test up to that and then gets rejected back down to 27. And that's basically what we've seen over at Google. And so right now with Google, you can step in here at about $2,700 per share if you want to bump it up to where the stock is right now, about $2,750, $2,760. You can if you want to, but the upward trend is broken. Now, what you'd want with Google for this to be viewed as kind of a fake out, you need to get back up into this channel, okay? You need the stock price to bounce from 2,700 to get back into this upward channel up in here, up over probably about $3,000 per share. I don't necessarily think that is likely. I think what we're more likely to happen, in fact, I have these lines in here. I didn't draw these lines are left over from our Friday Fang Stock Recap show. I'd expected this stock to come up here at about $2,900 per share, get rejected back down to 27. I think we'll retest or come very close to the $2,800 again and then get rejected again. Here's the key levels, though, that I want to emphasize with Google, okay? The bottom of the range here at 2,700 can be a buying opportunity, but I want you to understand the risk of that. If you break through $2,700 per share, there's not a lot of support underneath here, okay? The first level that I see actually is closer to $2,550 on this one, and even lower than that, you've got some areas down here, probably in about $100 increments, down to $2,400, $2,300. That is if the momentum completely breaks on this one, and you get down here, and it breaks this $2,700 level. So if Google retraces to 2,700 and you say, hey, that's a good buying opportunity from a technical perspective, I would agree with you. I just want you to understand the risk of that if we break 2,700, well, now instead of support, that will become resistance as this stock continues to move lower. Now, on the upside, I think you've really stuck in a range here. I think, in my opinion, when you go on this big of a move, okay, Google was just, we have to zoom this thing out big time to get the view of it. When you go on this big of a move over a year's time, you've got to take a breath. You've got to take a pause. It would be very healthy, in my opinion, for Google to go sideways for the next 6 months, 8 months, maybe even 12 months, okay? And if we can consistently hold this 27, say we do this a couple times with Google, and bear with me here, we bounce up, we come back down, okay? The more times we do that, the more confidence I have at this $2,700. And why is that? Okay, we looked at Google back in here. It did the same type of thing, okay? Not quite a tight as formation, but we bounced down here at $13.50 per share. It bounced there a couple times and finally springboarded upwards. I would expect the same thing to happen with Google, is that we'll consolidate here sideways for a little while. This $2,700 area will likely be a good area to acquire shares. I would nibble because I think you're going to get multiple opportunities. You're going to come down here to 27, pop to 29, come back to 27, pop back up to 29. Eventually, this thing will break to the upside as investors get more comfortable with the momentum of Google stock. Hopefully you guys enjoyed this video. Hopefully I provided some insight into Google. If I did, maybe consider hitting that like button. And gosh, I'm very close to 100,000 subscribers. I'd love to cross that mark as well. If you'd consider subscribing, I'd appreciate that as well. We'll be back soon with more videos here on the Investor Channel. Our goal is to make you the best investor in the world. I hope I helped you with that today. Good luck with your investments.